all of the people that left in the last recession back in 2007, 8, and also prior to that in 2001, when those talented individuals came back, they brought a huge value to the ecosystem. Think of the learnings that they got globally, and then they came back and started creating companies or working in companies in Canada. That's a huge upside. You can't get any more value than that than anywhere in the world.
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast, and today we have Jeffery Potvin with us. Jeffery is an angel investor in multiple regions and has invested in 55 plus companies. He is a member of the York, Spark, and Gitan Angels and screening committees while being the driving force behind Open People Network and Supporters Fund. In this episode, we talk about Jeffery's story and how he started investing, helping startups grow revenue via acquisitions, being a part of angel syndicates, Canadian startup ecosystem and its shortcomings, his biggest learning as an investor, and lots more. So without wasting any time, let's dive straight in. Hey Jeffery, so good to have you on the VC 10X podcast. How are you doing?
Prashad, very nice to see you. I'm very well, thanks. Very excited to be here today.
Thank you. Awesome seeing you here. And to start things off, can we first start off with your story and how you started investing?
You bet. It's kind of a little bit of a long story or longer story. It kind of has this workup. So I started working with early stage companies over 20 plus years ago. And it actually started when I was working for the largest retailer in Canada, which is called Loblaws. I was building out all of the e-commerce platforms back end. I was a software engineer working in the back, doing lots of different things, I guess you can say. And the cool thing about it was the front end and mid people didn't know what I did. They just knew I worked a lot and they knew I worked online. So they would send me startups and they would leave voicemails, emails, pitch everything. And that's kind of where I got started learning about startups and the whole business side. I was also a small cap investor at the time, so online was starting to build up and you could trade yourself. So I really enjoyed working in that space of small startup caps. So through that journey, I kind of learned a bit more about the startups. They'd come in, I'd see hundreds of them a month. And that's what got me really interested in this whole ecosystem and the space. It was very small, as you can imagine, globally, but especially in Canada, North America 25 years ago. And so started to work in that space. I would take the companies I liked, re-engineer their models, and then sell them through to executives within the Loblaws management side. So that's kind of where I got a flavor of early stage working with them. I couldn't invest at the time, but I could certainly work with them. And then I continued to do that until I left and went and created my first company, which is called Heartboot. And we do resourcing for big pharma, bank, health tech. We have offices in Philippines, Pakistan, and Toronto. And from that, got a lot of learnings by setting up companies in other countries, and then also got a lot of learnings from working with companies inside these other domains in other countries. We would also look to outsource ourselves into India and other countries. So we got a lot of learning from there, but we continue to work with early stage companies, really had this drive to help support that ecosystem. And throughout time, we continue to work until about 15 years ago, I had the ability to start investing. So we started to not just only help and support, but started to invest. And it really became just a natural progression. As you start to work with so many companies and they're pitching you all these cool ideas and you think, and businesses they're building, and you think, man, I really wish I could invest. So it really did take time to work your way. You pushed yourself a little harder because you were like, the next one I'm going to invest in. And that's really how it kind of started and kind of perpetuated from there. So over time, we started to invest, make more investments. And then about 6-7 years ago, those companies came back to us and said, hey, can you help us raise funds? Can you help us get in front of investors? And then that's where we kind of took a second to pause and said, look, we're really good at working with these companies. What more can we do in the ecosystem? And that's where we created the Open People Network or openpeoplenetwork.com. And that's where we started to build a community around early stage companies. And we did that over the better part of the last 6-7 years. And then through that journey, we started to get a lot of deal flow in of companies all over the world looking to raise funds, get in front of you just to pitch and learn and figure out what they could do differently or how they could get in front of more investors. And then that kind of stemmed a couple of years into it. We started to meet a lot of people in the ecosystem. legal groups, etc. And they started saying, why don't you build something more out of this? You've got great deal flow, you've got great access to great founders. Why don't you do more? And that's where we decided to build the Supporters Fund, which was our fund. Instead of just myself investing, this is where the fund came in. So the business was kind of divided into two. Open People Network, which is an event-driven community around helping and support early stage companies. And then you had the fund, which became the investment vehicle that allowed us to support and start investing into these companies instead of it just being myself. And that worked out great. And, we've had built two funds over the micro funds over the better part of the last 5-6 years. And now we've started to work our way into launching a third fund, which is completely different. And we can talk about that later. But just taking a lot of learnings over the last 20 to 25 years of working in early stage space. And I can tell you it's very dynamic and very exciting space.
Absolutely. That's an amazing story. Starting from someone who wanted to invest, had the deal flow already, but not the money yet, and then getting to a stage where you can actually start investing. I can totally understand that. And then, like, starting out a community, Opal People network for all the founders to come together and into events and stuff like that. And that also makes great deal flow for you to like pass through and invest your money into, right? So at Open People Network, can you elaborate a bit more of what are the kind of activities that you're indulging in? Is it like founders apply for funding to your events? Are these like pitching events that they can come to and pitch their startups? And do you invite investors, individual investors, angel investors to those events who can then make their own decision if they want to invest or not? So how does that kind of work out?
Well said. That's pretty much it to a T. When we first started off, we ran a lot of different events. So the events were run with the city of Toronto and all the other districts around Ontario and across Canada. And again, we'd have companies that would come in, of course, globally. And the way it started off was that we'd run live events where we'd have anywhere from 100 to 400 or 500 people that would come and spend time with us an evening. And what we'd do is we would provide them with somewhere between 3 to 5 startup companies that would be positioned, groomed to pitch amazingly. Like we would work with them to make sure that they were ready to go, and then they would get in front of an audience and they would pitch. And we made the events always about the founders, about the startups. We wanted to support them. We know how tough it is to build a company, and we wanted to make sure that everything was geared around them. It wasn't around sponsors. It wasn't around any of like those things. Of course, those things are beneficial to the group and help the communities find better ways to partner with big business. But at the end of the day, it was about the startup. It was about spending time listening to their pitch, figuring out if you could invest, figuring out how you could work with them. And what kind of stemmed from that is that over time, we started to really build up a community of investors that wanted to participate. They wanted to get access to the Toronto ecosystem or the Canadian ecosystem. And then from there, that built up a different group. So now you have all these startups coming to you, and now you have all these investors. And then as things started to progress forward, we started to look at what more can we do in the ecosystem and expand from there. And we started to work with different groups around the world, started to participate and join other investment groups in Egypt, India. And this allowed us to get access to the deal flow there and support them, but also drive them back into pitching at our events. And then once COVID hit, it kind of shifted where we were doing it, where we were going and what we were doing. And what I mean by that is that obviously everything came to a standstill, but we still wanted to keep supporting. So we went online, fully online. And what this did is it allowed us to reduce the number of events that we ran to running one every quarter now, which is called E2E, which is entrepreneur to entrepreneur. And what this does is it helps entrepreneurs help each other. So when they get on and pitch, there's live chat going on, and everybody's literally throwing out their contact details, their information, sharing who they are, reach out on their LinkedIn, etc. Hey, I know this person, I'll make an introduction. So this is valuable for a startup to be able to connect and learn how to share and open up their networks to other founders. And then what was great is that we had invite accelerators, incubators, Techstars, Founders Institute, York Y Space, all of these different accelerators and incubators to join. And the reason why this was valuable is because they're looking for deal flow. They want companies that are really early on, which is where we operate, which is first money in, first time you're going to build that business. So all of these groups would start coming in and they'd start talking. So this would allow them to start finding good young companies that were looking for acceleration, or incubation, and then drive them into theirs. And they could hand pick out the companies. Venture firms would also join in. Same thing with angels, and that would just allow for this nice cycle of deal flow. It's a 2-minute pitch, video recorded. So we went from doing live pitches to everything being recorded. I think the last one we did was 25 companies, 2-minute pitches. And then at the end, we do a one-on-one interview with one of our investors, just so that the audience can ask questions and learn more about what it takes to invest, what do they need to do in order to get accepted for investment from any sort of investor out there. And that's kind of the direction we've taken. So we try to build the community around helping support each other. And that's really where OPN fits into the market and what we've been doing over the years.
Yeah. Yeah, that's a very interesting model. So, is it a free to join network for founders and investors, or do you charge for your events or coming into this community?
Oh, it's all set up to be free. So again, we wanted
Hmm.
to help the founders as best as we can. We are looking at different ways that we can add in new revenue generating components that we can utilize to support the community. After 7 years of running this, we started to look at, okay, what other things can we add in that will be value adds that invest or founders would want to pay for in order to enable themselves to move a little bit quicker. So that's kind of some of the things that we're working on right now. And again, we think this is all value add. At the end of the day, everybody's going to have a little thing that they need. They want to get this done right away. And we want to be able to help support that. And that's kind of how we look at the community.
Right, absolutely. And about the supporters fund that you've built, I believe that's a VC fund that you've raised from LPs, and you're the sole decision maker in how that fund is deployed, right?
At this time, correct. The first two funds, I was the sole GP. In the
Hmm.
newest fund that we're working on right now to raise, there
Right.
will be, and we'll announce this at the time, there will be a few, or at least one more GP that's going to be added in. So we're pretty excited about
Okay.
that. And that
Yeah.
we are expanding it as we raise larger rounds of funding. We do need to have a lot more hands on and abilities to make more calls and move quicker. So I think that's going to really help us grow, having more general partners be part of the environment.
Certainly. And would you like to talk about what's going to change with the new fund that you're raising, or would you like to keep your cards close?
No, we've been out talking about it, so we wanted to get everybody's feedback. But taking
Yeah.
20, 25 years of early stage investing, some of the things that we looked at were, how do we start to decentralize kind of the risk appetite for investors versus the founders? And how can we support these founders even more while supporting the investor and helping them? So we did a lot of research, a lot of interviews, and we came back with kind of a very new model, but with an old structure that backs a very late stage investing structure, and it's called a roll up fund. So we're raising to build a roll up fund, and what that looks like is that we'll be actually making a first money investment into a company as we have been doing. We typically invest around 250,000 as first money investment. And then from there, and usually it'll vary, but say the valuations are around 5 million, give or take. And then from there, what we do is we start to work for those founders. So we want to look for to acquire companies on their behalf to help them roll up 3 companies over the next 3 to 5 years to get them to 50 million in revenue. So we want to get them to a more profitable state, but doing it through roll ups. So we're looking for a founder that better understands the ecosystem that they're in, really strong in that. They can project and see what's coming at them, but at the same time, those are the types of founders that we can back and support. Ones that want to expand and grow, not organically. Those are great pieces to have, but we want to be able to grow through acquisition, finding IP, finding teams, resourcing, all these different things that are going to layer in to grow that business and be more impactful to generate stronger, bigger revenues. And then from there, we provide them with a part-time CFO to help manage the data going in and out of the companies. Again, we're really strong on supporting our founders and making sure that all information is being distributed to all investors on a timely monthly, quarterly basis. We roll up 3 companies, and our goal is to get them to 50 million. And then we built in a rev share model, so there's some value exchange, so it supports the liabilities on both sides.
Right. That's very interesting. And with this, the target will be somewhat later stage companies, right?
It's going to be early to mid tier companies. If
Hmm.
we go to the too late, I think that would be great, but we would have to raise a significant more dollars in order to operate
Right.
this. What we're looking
Right.
at doing is coming in a little bit earlier, still early to mid market. We seed
Hmm.
investments. So because we're first money in, we're basically making hedging bets that those companies are going to be where we want them to be when we start doing roll-ups. So the more companies that we
Right.
can start making investments into last year, this year, next year, are going to work their way through the ecosystem to grow so that we can get behind those founders and start rolling companies into them. So it's really crucial that we continue to keep making investments so that when we find the ones that are really strong in what they're doing, we can then start to layer in new acquisitions on their behalf. And that's really the key to it. And we've come up with different programs where we can offset the resourcing costs through hard boots. So we will do a 50-50 split. That way we can get more investments into companies, which means that we can monitor um, more deeply into these companies that then allow us to see how they're growing and find out if that allows us to then make acquisitions on their behalf.
Certainly. Yeah, that's a very interesting model. And let's talk a bit more about this roll up strategy to increasing the revenue. So, one way to increase the revenue of a company is like one is to just grow the existing revenue streams, right? Another is to open up new revenue streams, right? And maybe an outside way is to like get some acquisitions in and get their team and who are probably already doing well in whatever they are doing, and you just acquire them, right? So, what makes you think that this acquisition model, because acquisitions can also be expensive and it may take about 5 to 10 years to for some of the acquisitions to actually pay off, right, for what you've paid for them, right? So what's your perspective on that, that's a good way to like increase the revenue stream?
Well, because it's earlier stage, mid tier, a lot of the acquisitions that we hear about in the media tend to be 5, 10, 20, 30x. These are companies that are really cutting edge or they have strong IP, strong team, and they're rolling them in because they're envisioning that this acquisition will allow them to generate the value off them, as you mentioned, in 3 to 5, 5 to 7 years, even up to 10 years, that they'll gain back that value. In our case, we're looking for companies that are owning their domain. They can be in any country around the world as long as we can legally structure it so that it makes sense. And we're looking for strong IP, strong revenues, growing. But there's a lot of companies that are unable to raise funds because they may not fit the investor profiles. They may not fit in the ecosystem. They may not have those dollars to have the acquisitions occur or raise funds. So you can say that they're somewhat distressed. And the reason they're distressed is because the variables I just mentioned. So there's a lot of opportunities out there, especially the time we're in right now where things are so whimsical on the markets and inflation, et cetera, with wars. So those things all kind of allow for more opportunities to create acquisitions, and they're not going to be 20x what they raised on or what their revenues are. They tend to be half x revenue. There is a whole different world out there that a lot of investors and a lot of businesses don't see. They just see what Elon Musk and everybody's posting everywhere on how these $50 billion acquisitions. There's a lot other opportunities out there that aren't in that space, and those are the ones that you have to look for, and that's where the opportunity is. A lot of the time, it depends on the types of companies you invest in or the verticals you go after. But there are a lot of competitors that may hit walls and they can't figure out how to extend from there. But they have strong IP or they have strong team, and that's where you're going to see a real benefit from making that acquisition.
Yeah, that's certainly a great way. And like you mentioned, like now is a great market to be like taking the strategy of roll-ups, because there are probably a lot of distressed company which are good companies in themselves, but because of the environment, they're probably not able to raise or not able to raise on the round that they want. So maybe they can consider an acquisition, right? And that can be a good strategy, right? Uh,
Correct.
all right, that's awesome. And now let's talk about this. So you've been an angel investor for years and years now, right? And you've been an angel investor with some of the most popular syndicates, most active syndicates in Canada, right? To name a few: York Angels, CTAN, etc., right? So I wanted to ask, what are the kind of startups that these syndicates generally like to back? And you being an angel investor in these syndicates, what are the kind of deals that you like to personally invest in?
Yeah, they really do vary. It's interesting because when you have a large group of LPs, you tend to try and find companies that have some forward movement. They're growing. They have and require some expertise. So a lot of the Angel groups, they tend to look for, I would say there isn't a set vertical all the time. They're pretty agnostic to the market. A lot of them, say on the G10 side, Equation Angels, they look for, specifically could be biotech, ed tech, but they all kind of hit the same flavors when it comes to deep tech, fintech, CPG. I would say CPG is always going to be a lesser of the investments. It's not always an understood market, doesn't have the same gains and velocity as a lot of the other companies do. So I think a lot of the angel groups do support pretty open ended on who they're going after, that they want to find companies that are starting to show some significant value. They tend to have some form of rule that says that they have to have at least $500,000 in revenue. That way it's proven, it's a little bit more palatable for the investor to get behind, because at the end of the day, a lot of these companies can take anywhere from 5 to 10 years to exit. So if you're looking at that kind of trajectory, you've got to have staying power. You got to be able to make an investment, hang with the company, and still support them along the way. So I think a lot of these groups do look for certain criteria, and then those criteria are open-ended on the vertical, the type of company, but they do want to have some initial traction, and I think that's great. It's very supportive. They make a lot of great acquisitions and a lot of great investments, and it's well worth being part of these groups. So highly motivate investors that listen to this to find a local group, local angel group or venture firm that they feel they can get behind, and then join. And I think that allows you, one, to learn about the space, learn what they're looking for, but also how you can bring your expertise in to support it.
Certainly. And I believe you're also a member of the screening committee in some of these syndicates, right? So, what do you look for when these deals come to you? So, what are the key things that you're looking for in companies in deciding and filtering out the good ones that you can then pitch to your LPs?
Well, I think like anything, it's understanding the market segment that you're in, and what you don't know, you're going to have to research, dive into, and learn a bit more. I think one thing that there's always that always changes is that there's a new company coming in doing the same thing that everybody's been doing, and I think sometimes we have to look at it and decide, does that matter that there's another competitor coming in that's at the smaller side? Do they have the opportunity to do something different with their brand? Could they be the brand that owns this space? I think a lot of the time we get stuck with, there's already a Netflix. But is Netflix really doing the right job? And can you compete on other areas for content, quality, price? There's a million other categories that can fit into it. So you always have your big players, but there's always ways to eat away at some of the smaller people that haven't bought into the product. And I think that's how you have to look at everything that you're diving into. There's always room for disruption, and being a little tactful. Maybe it's not the right way, but getting behind a brand and supporting that brand, if it's in the wellness space or it's in the fintech space, whatever that might be, it's really trying to understand, can that founder, the jockey, can you get behind that person, and can you support them to help them grow their business? I think that's the number one thing you have to look for. And two, is there a market appetite for this product today? But is there even more of an appetite for this product in 5 years and 10 years? If you can't see anybody caring for that widget in 10 years, and this is just a now thing, they're probably not a good company to get into. If you can see it in 3 years and 5 years because of the growth, but you kind of see it trickling out, then that means you have to look at the opportunity that this is a company that you're going to get into quick, and you have to have a say at the table to help them sell at a certain point, because it's not going to be of value in the next 10 years because you don't see a trajectory of growth in that space. So there's a lot of little elements that you have to take into consideration. We do full due diligence on any company that we want to invest in, because we do have to project out. If we're going to do an acquisition, we have to find like-minded companies that will fit into that model in 2 years, 3 years, 5 years, and then also who's going to want to buy them in 6, 7 years. So there's a lot of things that you kind of have to play into the market. But I think the little things that you look for, or the top three things I would look for, is the founder, and can you back them? Do you think that they've got what it takes to eat, breathe, and sleep what they do? They have a fifth gear, like the Michael Jordan, LeBron James fifth gear, where they just turn it on and you're just blown away by the fact that they were down by 40 and they just won the match. That's the founder you want to get behind. And then the secondary thing is that, do they have a brand, and can they build a strong brand around what they're trying to do? Are they brand oriented? Team is obviously important, but that's going to change over time. As you grow your business year 1 to year 3, you should have totally different teams, because every year that you start to grow, you're going to start scaling. You need different people that come in at scaling time. So is the right team today doing what it needs to do, and can they pivot and grow with the new team as they continue to build sales and grow that business? And then the fourth one is, who do they surround themselves with? Do they have a lot of great insights from advisors, other founders, investors, VCs? Those are also important because they help guide the ship along the way. I'm sure I could go into a million other things, but those just give you a quick snapshot.
Yeah, those are some great points to look for. And like, since you are sitting at the core of the Canadian startup ecosystem and have been seeing it evolve over the years, right? So how do you see it shaping up? Do you think that it's getting more and more vibrant? It's getting healthier over time, and are there still any downsides to it that still need to be fixed?
Well, it's interesting if you take a look at, say, the last 10 years. The environment over the last 10 years has been heavily supported by, 10 years ago, it wasn't as heavily supported. It was kind of nascent and growing. There were a few players that were coming in and playing. The government was very supportive at the time. And then what ends up happening over time is that, and this should be common in every country, is that when you start off with something new, you have a lot of backers, government backing, maybe groups that are created to support it. And then over time, when you find that you create a line and a base, the people who started it tend to walk away. They say, okay, we got you this far. We can't support you anymore. Hope you can find your way, and I hope you can continue to find money that will support your baseline. But the economies are working, things are driving forward, and we're going to pull back. So that's what's happening now, is that you've had a lot of growth in the group, especially in the last 5 years in this early stage sector. A lot of funds, a lot of support that weren't there 5 years prior, that are really now starting to make that trajectory in. Angel groups, etc. Lots have been growing. Now what you're finding is that the government's pulling out and going into other sectors, into other areas of needs for Canadians. And this happens in the US and the rest of the world. So what ends up happening is that now everybody's kind of scrambling to figure out how to support themselves without the bear hug that they were getting before. And this is common again. So how do you support the ecosystem? So I think some of the change, it's tough to say that you always need government regulation, security blanket, you need all those things throughout this journey. I think you do, but it's tough because I think it got abused a bit as well. It wasn't properly used to support enough of the startups, enough of the ecosystem. So now it's kind of weaning and trying to figure out its way through this. I do think that there will be, no matter how you skin the cat, the government would have the ability to do the most risk. So I do think that this early stage project and testing, I still think that that has to be somewhat supported by government. That's what's going to build innovation in an ecosystem, is the people that want to throw $20,000 into a test pilot of some crazy cool bio hack that nobody else feels it's a risk or a need. But that's where I think government can come in to really support that and kick those off. And if that's done at the university and college level, so be it. That's awesome, and that's where it should be. Then you've got more students being creative and coming up with those ideals and projects. And that, I think, has been a need throughout the entire time. It tends that we all look for where the money's going to go. So that just means that, early stage didn't get as much money as, say, mid scaling size and later stage, because everybody wants to get the return so they can recycle their money back in. So in order for that to continue to happen, you still have to feed the bottom, or you won't get enough companies to get to those stages over the years. So I still think you need some risk money, and I think government provides that, hopefully more, and they won't walk away from this. The other side is that in order to de-risk as well for investors, another component that would be really helpful is a form of tax benefit. And I think some countries, some provinces do this. I think that this should be more widely utilized, because there are a lot of high net worth and high wealth people that don't tend to go this low in the environment and want to invest in early stage. They tend to, again, go further upstream, which again prevents this innovation market and growth. So we do need to find ways to offer tax benefits to investors so that they will put more risk capital in to support that angel investment or that pre-seed seed investment. And that's where it's going to allow more companies to get through and more learnings to come out of that. So there's a few areas that you can play with, but I would say that overall the Canadian ecosystem will always be strong. There's a huge drive for innovation. The Montreal corridor for AI, there's so much going on there in Toronto and across Canada. And this is exactly the same thing that's happening in a lot of countries across the world that are looking at ways to start putting money into the youth so that they can come up with better ideas to build companies, because they're realizing that, again, more people working is better for the environment, and more innovation is going to create long-term growth in the GDP of every country.
Right, absolutely. And yeah, I agree that I think government at even if like it's slightly matured from what it was before, I think the government support is something that's always required for any startup ecosystem to thrive and sustain over time, right? So I think that aspect should always be there. And one call out that I've seen for the Canadian startup ecosystem, when you look at it from a global perspective, how the startup ecosystem is in other countries. So one thing that I've heard is that it's the market for skilled workforce isn't that big. Do you agree to that, or do you think that's changing?
It's slowly changing because you have programs that are bringing in a lot of foreign companies into Canada. So you have startup visa programs where they bring companies in, which I think is very helpful. It can be tough if you can't find enough investors to invest in all the companies. But then what's up happening is that when those companies do come in, their ideas and innovation spread either to more entrepreneurship or they get picked up by other companies. So that also brings a lot of value because now companies are picking up talent, and the talent are coming into the country. So they may come in as a startup visa program, and they may leave working for IBM or one of the other larger businesses. So there is a lot of gain no matter what, how you operate on that side. I think that in time, as this ecosystem continues to build up in Canada, there was questionable points where we thought we were losing all our talent to the US because they were paying more, offering more value. And then the pandemic drove everybody back to Canada. So maybe, hopefully, we're able to continue to support the talent that we have, and maybe that will continue to stay and grow. But if not, if it does have to go out, what I did find and what I do see quite a bit, which I think is phenomenal, is that all of the people that left in the last recession back in 2007, 8, and also prior to that in 2001, when those talented individuals came back, they brought a huge value to the ecosystem. Think of the learnings that they got globally, and then they came back and started creating companies or working in companies in Canada. That's a huge upside. You can't get any more value than that than anywhere in the world. So I think that is a good thing. And you'll still have people that are going to leave, but eventually they all come back because you come back because it's your own base where you grew up or whatever that might look like. And you're going to bring that knowledge with you. And I think that's huge.
Certainly. Yeah, I totally agree to that. And you're also the host of a podcast called Ask an Investors. So, can you tell us a bit more about that and what are the key conversations that you're having there, and who are the kind of people who can benefit from listening to the podcast?
For sure. Well, it's one of my favorite times that I have a couple of them doing today as well. And I'm a huge fan of it. And it really allowed me to open myself up to start asking more questions and to be more poignant on even having dialogue with other podcasters. So a big fan of what it's brought to myself and doing, and what we explore and how we operate in Ask an Investor is that we reach out to early stage investors. Typically, it's anywhere from angels, pre seed investors, up to, I'd say, Series C, D investors. It just goes a little further upstream. And it really is diving into the investor. It's pretty much 100% investors. We are working on another one called Superhuman, but this portion of it, which is we've done over 150 interviews to date, they're all strictly with the investor side, with the investor hat on, so investor to investor. And what I love about it is that I really get to ask a lot of questions like yourself of the investor, the way they think, where they came from, and then working off that experience. And the reason we dive into the experience of the investor is because I want other people that listen to the show to say, hey, I could be an investor. So the idea behind it is that, yes, it's a very valuable tool for startups to learn from these investors and figure out how to connect to the investors so that they can reach out and say, you know, I learned you did this. I really want to chat with you. I think you'd be a great investor in my company. But I think on the other side is that it also, in a way, helps them project where they could be in 20 years. It helps the investor also project where they're going to be. So we get to dive into all of these things that they've learned and share that valuable insight. And then hopefully, when the other listeners that are not investors and they're not startups, but just hardworking individuals globally, that they might look at this and say, hey, they're not doing anything different that I didn't do, so I should become an investor. And this will create more people to start thinking about the risk factor and saying, maybe I should invest in early stage companies, because there's a lot of smart people in this world, and a lot of them don't know they have the ability because they worked in the same company for their entire life, that they don't think that that's super valuable. And I think that that's huge. And you could tap into those people to get them to go in and start listening at angel events and start investing. You just open up the world to a whole bunch of new innovation and supporting more founders.
Certainly, I totally agree. Being a fellow podcaster, the kind of conversations you get to have with people, you personally learn a lot. Plus, you are projecting that learning to a whole lot of people by publishing it, and other people can also learn from the conversation that you had, right? The questions you asked. So I think that's an amazing learning thing, and also an amazing marketing medium as well, especially for this space, the startup ecosystem and the VC ecosystem, because I believe that this industry is more about people than it's about money, right? So, and what podcasting does is it puts people at the center, right? You're directly hearing from the person who's going to put their money in, right? You're listening to them directly. There is nothing in between, right? And that gives you a lot more learning about that individual, what are their investing preferences, and a lot more, right? And it's
Totally
also
agree.
branding, yeah, and the branding aspect as well, that the investor, like, this is going to go out, and everyone is going to listen to it. We're going to make social media clips as well from this, right? So it gets a lot more visibility. So there's also a brand building aspect. So I think this podcasting is actually the perfect medium of marketing as well for VCs. The learning aspect is obviously number one, and the, like, motivation, inspiration that goes out with it. But I think the marketing aspect is also super uh, important for VCs or angels in the space, right? All
Agreed.
right. To close this, yeah, close this off. My last question before we move on to the rapid fire round is, what's your biggest learning investing in startups over the years?
I always think this is a great question, because I guess how I would answer today is going to be totally different what I'll answer next year and 2 years and 3 years from now, because you're always learning and you're always finding new things about the ecosystem or an investment you make. And I think in time, it's like anything. The more you do it, the more cognizant you become of the space around you and the things that can happen or the things and where it can go. So just like in the podcasting side, when you're listening to a podcast, you may think this is amazing, but if you only remember one thing in that podcast, we've done our job. Whatever that one thing is that you remember, because your brain just doesn't always compute to everything. But the more times you hear something or the more times you experience something, that pattern starts to project in your mind, and eventually you'll take place and hopefully execute on it. So the more times you hear it, the more times it comes in front of you. So I think when it comes to the same on early stage investing, is that the more times that you're in front of deals, the more times you're deep diving into deals, the more times you're interacting with investors, speaking with startups, all of that is learning. You're gaining more and more knowledge about a different market segment, a different business, a different model, a different branding, a different style to get customers. So as you're learning all that, I think that's super valuable for you to share and get that out to your community and push that through. And I think that, to me, is the most valuable thing, because you're always progressing. And the more you're in it, the more you're going to learn. If you're half in, you learn half. So, how do you get yourself fully baked into an environment where you're always learning? You're not a part time doctor, you're a full time doctor. You're learning everything to help people. And that's the same thing that's going on in this early space, is that you really have to be really thrived and built into it. And that's where you're going to get the most knowledge that's going to help others along your journey. So, I think the things that really stand out as being probably the toughest learning, I think, is that you're investing in people, and you mentioned that it's always about the people, and it is always about the people. And when you make it about the people and you support the people, you know that there's a lot of ups and downs. Not everything is going to be a win. There is high risk in anything you do, and in this space it's even higher, because you're trying to invest in people and their ideas that have never built a company before. They've never operated a 100-person or a 2,000-person company. They've never scaled a company from 500,000 to 50 million. So there's a lot of learning that are going to go on, and everybody gives opinions, and everybody's pushing them on the founder. So this really comes down to is how well your founder balances out all of the conversations, is able to break through all of that and come up with their strong ideals and pattern, and they create a choice and a direction they want to take their company, and then you get behind it and support it. So there's a lot of learning you're going to go through, and you might say this is the best way, and then they don't do it, and it wins, and that's awesome, because it's not about what you say, it's about the information you share and what that founder is able to put together to build the strategy to move it forward. And then you get behind and support that. It's not about you, it's about them and their business and how you can support them. So there's a lot of learning you're going to take in every angle. And to me, it's so dynamic. Every day is interesting. Every day has new innovation and cool projects. It's the ones that can really deliver and execute, and that's what you got to find, and the rest you're going to learn from, and you're paying to learn. That's really what happens. And hopefully you have all this success in your investments, and you're okay with the ones that don't, but you just know that you got behind a founder, and hopefully you can support that founder on their next company and their next company, even if they fail the first three.
Absolutely. I love that take. You're paying to learn, right? That's great. Awesome perspective. All right, let's now do the rapid fire round wherein I'll ask you 5 quick questions about the investing that you're doing, and you have to give 5 quick answers. Sounds good.
Perfect.
All right, so the first one goes, what are the sectors and regions you're investing in?
We look at deep tech, fintech, CPG, which can vary in prop tech, robotics, AI, machine learning.
Yeah, and regions?
It's global. We'll probably back and support North America to start, and then acquisitions would be globally, again, depending on the sector and how it fits into the model.
Right, and what's the typical stage of investment?
We're typically first money in, so the 250,000 as that first check in. Again, it may shift where that goes a little bit more upstream. So the company may have a better position. They may have some investors already. And then we would become maybe the first venture check in because of where we have to go in and do acquisitions. So let's just say that we're still working on where that is, but that's typically where we start.
Right, and where can founders apply for funding?
If they reach out to us at the open people at openpeoplenetwork.com, you can find us on LinkedIn, either through my name or through the company's Open People Network or supportersfund.com. Either one of those platforms, you can share your information, apply to E2E, or you can send us an email through that system as well. Our calendars, etc., are all there, so you can find anybody on the team.
Awesome. And last one, where can our listeners follow you?
Same platform socially. I would say LinkedIn is probably the most common one that we talk to startups and investors globally. I think if you're looking at the podcast side, you can find all of them at supportersfund.com or our YouTube channels, etc., at Open People Network or Supporters Fund. That's where we typically drop as much of our content as we possibly can to support and help where we're going.
Absolutely. I'll make sure to put all those links in the show notes below. Thanks so much for making time for this, Jeffrey. Learned a lot from you about angel investing, supporters fund, and the Canadian ecosystem. Thanks for coming on, and happy investing.
Thank you very much for having me. It was brilliant. Enjoyed it a lot. So great podcast. I actually enjoyed all of your podcasts. I listened to a few of them and they were brilliant. I may have to reach out and get you to introduce me to some of your interviewees, but fantastic job. Keep up the great work.
For sure. Happy to. Thanks for coming on. Have a nice day.
You too.